we may be witnessing the setup for an explosive move on the German index. Despite nearly a month of correction, the broader market structure is still pointing upward. I'm still seeing signs of strong momentum and opportunities that produce abnormal results. But when that same kind of pressure starts building on an entire index, it's a sign to get ready. It means a significant move may be coming, and those who are prepared can capitalize on it. In this week's video, alongside our usual analysis, I'm going to walk you through the daily routine that I use to spot such opportunities. It's a 10 to 30 minute process that keeps my trading simple, calm, and consistent. It's the same routine I repeat every day, and it's the reason I stay objective and focused no matter what the market is doing. Remember to subscribe for more insights like this. Let's dive in. Analysis of the DAX. So as you can see, our dear German index is really going sideways in a very, very tight manner. So right now, definitely we are ranging, right? We are not yet, I would say, in a bullish phase, bull market phase, but we are getting there. And I've added today the Bollinger Bands for you to really see how tight that contraction is, right? So, I mean, look at this, right? This is pinching a lot. That's what you would see on like a stock, right? Like even on like small cap, this is really, really consolidating tight. Look at this. And what that does, right, is whenever we have a break, hopefully to the upside, it oftentimes unleashes volatility and explosive moves, right? And if we go back actually a little bit in the past, you would see that such thing actually happened before. So that was at the go signal of the bull market. I would say, that was in mid 2024. It started actually early 2024, but we had a consolidation throughout 2024. And look, the Bollinger Bands stabilized, they are horizontal, they are tight, and then break. And it unleashed a very strong leg up, right? And that one right there is much tighter, right? It's actually very impressive to see that. So, I don't know, what are we going to see? Are we going to see a scenario in green, which I'd love, or a scenario in red, right? I don't know, right? What I'm saying is this tennis match that's going on, right? We want that to oscillate, and we want these oscillations to reduce, to be close to the resistance line and to break. And if we have that, I will modify my risk management, and on the opportunities I'll take on the German index, I will be more aggressive. So to be seen over the next few weeks. Moving on to Bitcoin. So Bitcoin is posing this week after a month of drop. I'm going to remove the Bollinger Bands here. And I'm actually going to switch to logarithmic scale. So after a month of really free fall drop, we have a pause, right? So if you remember, the scenario we had in mind is now we might be in a much broader consolidation between around the 75,000, which is a little bit higher than the previous all-time high, and the last high, which is around 127,000. So we may be just in a more volatile consolidation, right? And that will probably take multi-month, right? So as we said last week, we broke this upward channel on Bitcoin. So definitely now I am not bullish, and I would need to see basically over the next few months what's going to happen. For me to switch back to my bull cap, I would need to see that. I would need to see the price rally back around the previous high, and I would like it to consolidate and same as usual, right? To cook under that resistance and to break. And if we have a clear break, a clean structure, then I might take a position. But right now, no, I'm not bullish on Bitcoin. I think the drop was really big. So let's see now if we can hold above that level and proceed as I drawn. Analysis of the Ethereum. It's a bit of the same story. As you can see, so that's what we drew last week. And our scenario is still very much in play. We definitely have here around the, it's around the 3,000 mark, a bit below, around there basically. We can see in this rectangle we have definitely some support. So we don't know, right? What I'd love to see basically is a bit similar to Bitcoin. It's the price, rally back, to oscillate, to really get tight under that resistance and to break. And that can take months, right? It can take a quarter or two, but definitely because we had such a drop, right? It would be healthy to have a longer consolidation and to break to the upside. That would really give us a strong, sustainable move as well, and have maybe another leg like that. But right now, same, we are ranging. As long as we held above that support, we are still okay, I would say. Analysis of the XRP now. And well, look at that. Our XRP is holding on very nicely. So we are ranging, same as the other crypto, we are ranging. But the XRP is really holding the line into this kind of channel there. So the line there at the top is the previous all-time high. And you can see that, we tried to go through like few times, didn't work. So we turned down and we are, we just hit that support line there. So no update there, a week of pause, right? We are still in there. Again, I'd love to see the price, going back up there and just playing tennis basically under the resistance line and a break. And that would really, because remember on the XRP we had this huge triangle that got broken there with a really tight volatility towards the end. You know it by now. This is what I love to see. Break and a huge leg up, very strong, from 0.68 all the way to 3.3. So that's a big move, several multiples. And now we are consolidating. So that's the first consolidation after the break, right? After huge volatility, consolidate. It's healthy. We cannot go into a straight line forever. We have to consolidate. We have to pause, to breathe before going back up, right? So we're building a big staircase, and I would love to see that over the next month. So let's see next year what's going to happen, but definitely, it's going to take a few months for that to happen. Analysis of the SP 500 now. I'm moving back to a linear scale, and we had a very strong week. So I'm going to remove the channel that got broken last week. And we had a really big week. I mean, look at the size of that candle. This is 3.73%. That's a big candle, right? So definitely we found some support there. And my scenario is like we might be ranging for some time and hopefully have a break and head back to the upside. So this is still, very much the scenario. We are still in the bull market. However, now we are pausing, right? So when such thing happened, I guess the past 4 weeks have been a big enough of a consolidation for me to modify my risk management. So I'm gonna basically bet less on trade that would take until we have a break of that resistance line, and then we clearly head back into uncharted territory, all-time high, and bull market. So I will be aggressive again if we do break that resistance. NASDAQ, similar story there. I'm removing the channel. Strong week, similar story. Nothing much to add. So same thing. We might be ranging for some time before breaking again to the upside throughout next year. It would be healthy that this takes a few weeks, a few months. The longer and the tighter the consolidation, the more powerful the break, either to the upside or to the downside, right? Moving on to the CAC 40, the French index. So we did break this a few weeks ago, right? We did break this support very neatly. We had a pullback, so break, pullback, and now we are playing tennis right there. So the question is, are we going to be able to stay above that, right? So definitely there, my risk management would be more aggressive, bull market. But see there, we are now ranging, right? So the idea would be, when are we going to break, right? So I'd love to see the break of that level, and yeah, I will also modify my risk management on that. So nothing much to say. We are ranging after the break of this big base there, literally almost 2 years, right? Since early 2024 to late 2025. Little staircase there after we broke the level to confirm, and then if we break that, we might have a very nice leg up. Moving on to gold. Very strong week as well in gold, and the markets have been running quite a bit this week. Very strong week. So remember, I mean, gold has been really steadily going up since early 2024. We extracted there from this very large base, multi-year, right? So mid 2020 all the way until early 2024, we had a clean break right there. After that, leg up, first step of the staircase, the very nice consolidation. This was I actually took position on that breakout right there. That was an amazing run, and we were given another beautiful entry this year around September with a very strong breakout as well, with an even more powerful still leg up. So that's not sustainable, right? And that's why you see, I mean, look at the size of that candle and the wick right there and the drop the next 2 weeks, right? It is not sustainable to go up so aggressively for that many weeks. The market has to breathe, it has to release, right? People take profits, which is what it's doing now. So the party is not over yet, not at all. And now we might be building another beautiful pattern, which I'd love to see. So similar story, heading back all the way there. And I would love for that to take actually longer, right? That to take a few months, and maybe throughout first quarter or mid next year, we would have a clean break of that level, and its health is what we need. So that would be a great way actually to enter on a weekly time frame, right? However, it might be that the price is going to keep rallying fast, even faster, right? That this is not the fastest it can go. It can be almost vertical. And in that case, it's going to be difficult to find entries on a weekly time frame, and you might have to drop on lower time frame. But definitely right now gold is ranging, but we are still in a strong bull market, obviously, right? We just have a more volatile there consolidation. So let's see over the next few weeks and months where we're heading. And finishing up the analysis with the dollar index. Dollar index, well, after a breakout, we have a week of decline. So that breakout is not quite yet validated. We still have resistance there. So let's see. I think, as I said, there's really a chance for the dollar to appreciate for maybe up to 20%. Again, where did I get 20% from? From the previous amplitude right there, right? So the rationale is we use the swing technique on that, see, double bottom break, and on that move there from the low to the high, I just copy pasted it over there, and that gives us a potential target. Doesn't mean the price is going to go there. It means that happened in the past. So the rationale is it's likely that it could happen again. We might be stopped before, however, we don't, right? It's just like a potential target up to 20%, which would be huge, right? So we had also there similarly a beautiful double bottom there with a beautiful handle, cup and handle and double bottom break. Beautiful. And here we might actually be doing the same thing. So double bottom 1, 2, and we might be drawing a handle of a cup and handle right there, right? So that's our basic cup, that's our handle and break. So to be seen. All right, moving on to the side topic parts of this weekly video. I'm going to talk about my 10 to 30 minutes daily routine, my daily trading routine that I do every single day, right? And I'm going to take you through the 6 steps basically that I follow to, screen, review my positions and go about my day for trading. And that's all it takes. Take me 10 to 30 minutes, depending, how many stocks my screener is going to return me every day, right? It's clean, simple, consistent. So as I said, there are 6 steps for that. As basic as opening my workspace where everything is saved and loaded. And I'll take you through in detail of each step. I'm just going to go through them quickly right now. Reviewing ongoing positions, reviewing my watch list, which are the things that I've saved that I'm monitoring, or things that I did not trade, but I still want to see how they develop for learning purposes. I run my screeners. That's what, like shows me my opportunities. I look deeper if something stands out, and that's where I'm going to plan and monitor things, right? Place orders and so on. And number 6 is done. I repeat that daily, every single day, and that's the power of a trading routine. And the beauty of that is that it takes me very little time, so it's compatible with many other projects, hobbies, work, businesses. I like to do it early morning. Everything happens when markets are closed, so I choose early morning, first thing I do when I wake up. However, you could also do it at night. So let's dive now a little bit deeper into each of the steps. So as I said, the first thing I'm going to do when I start my trading day is open my workspace. So I launch my platform and everything's already loaded, organized, layout, my list and my tools. So you have a screenshot there of what I use. So I use Pro Real Time, but you could organize that however you want, even on TradingView and other softwares. That's all good. And so I like to use a weekly chart on the left side, and that's what I use for screening. It's very simple. I'm going to use candlesticks or sometimes bar charts. I have a 20 simple moving average. So yeah, moving average at 20 period, and I use Bollinger Bands. Bollinger Bands, as you know, because I like to look at contraction of volatility and very specific pattern. I trade breakouts and I go with the trend. On the right side, I'm going to have a weekly chart, and that's going to be great to just fine-tune analysis, like the resistance lines, if I see micro basis, contraction, volatility, and to appreciate better breakout and volume. So the daily time frame is really used for a timing, fine-tuning kind of perspective. I use volumes, I use indicators a bit for market cap to see how liquid a stock might be. And I basically have my screener and a bunch of lists. And this list are going to be all the things that I've saved, right? Either my ongoing trades, so these are charts, right? Tickers, my ongoing trades, the thing that I'm following, opportunities, the past trades, and so on. So everything is already loaded as is, right? As you see right now when I open my workspace. And that's important. That's what allows me to save time, really. I open it, boom, I'm ready. I'm ready to get going. The second thing I do is review ongoing positions. So I check the situations I'm already involved in. I check what's active, what's progressing well, and what might need attention, right? So I use a couple list actually, and that's part of my risk management. I use a couple list in and free. So the in category are trades where I placed an order that has either not been executed yet. So I want to monitor, that trade. Why am I not executed yet? Is it because price has not yet touched my buy stop order, or is it because actually we had a gap and we went too far beyond my entry max price? So that's what's used for. And the second thing is also the trade where I am already in a position, but I'm still at risk, which means that I have not yet locked in with my stop any profit, or the trade is not what I call free, meaning I can't lose anymore. So that's what I have in that list. The free category are trades which are already locked in. So I took partial profits of this trade and I raised my stop to break even or beyond, meaning that I cannot lose money anymore on this trade, and I'm going to stack my free trades in that list. The third step is reviewing my watch list. So there are two things that I watch for, right? And the watch list is ideas and monitoring, as I said. So I'm going to look at, for example, when I do my screening, if I see something developing that looks really good, that the pattern I like, I'm going to put it into my watch list. And every day, as I'm going to do this routine, I'm going to check how these opportunities are developing. The other thing is what I call trend. These are patterns or symbols that either I missed, right? So I missed taking the trade. I was too late or I didn't see it, but it's still interesting to see how it develops. Or a trade that I decided not to take. Maybe I felt, I don't know, uncomfortable. Maybe I felt like the pattern was not quality enough or something was missing. There's usually some uncertainty tied to that. And it's really interesting to put that in a list because this allows me to follow along, like to simulate had I taken a trade, what would have happened, and to learn from that. So it's really like learning capabilities and also to stack basically to store a bunch of like good trades, whether you took them or you didn't, but it's really interesting to store trade high quality setups and to do like that review regularly, to go through the good setups to get your eyes and your judgment better and better and better. Number 4 is running my screeners. So I use specific filters that help me spot the exact setups I am looking for, and that across several markets. So I'm going to run my screener on the NICE, on the NASDAQ, on the Euronext, on the German exchange, Italian, Spanish, Belgium, and maybe there are a few others. And what that does is for specific criteria, right? Specific thing that I'm looking for in stocks, it's going to return me a list. And very quickly, I can just scroll through with my mouse and I can, it takes me a couple seconds to just see, okay, is this interesting or not? So even if I have a list of, when you have a lot of opportunities, when the markets are running, even if I have a list of 200, 300 tickers, which is rarely the case, but if that's the case, it still takes me 5-10 minutes max. It takes me really a few seconds on everything, right? So that's what I do. The screener really does a lot of the heavy lifting to filter out a lot of the stuff I don't want to be looking at. And then I manually, with my own eyes, go through that and vet whatever it is that, choose whatever it is that should, requires my attention. Number 5 is, as I do my screener, I look deeper if something stands out. So if something is looking promising, I'm going to slow down and I'm going to look at it more carefully. If it's strong, it's going to go in my watch list, or if I have a doubt for any reason, I maybe put it into the trend list. And if it's ripe, if it's ready, well, I prepare my plan for it. I'm going to see, okay, where do I want to enter? What's going to be my stop? Maybe I'm going to place a resting order and so on. I spoke about that in another video, but these are the two main things that I trade, right? Cup and handles and tight bases. And you have examples right there on your screen. These are really, really good examples. Again, you can see how these have an amazing contraction of volatility. Look how the Bollinger Bands are pinching and they are horizontal, and towards the end, right before the breakout, it's amazing, right? And these two are really under a very clear resistance line. So I have a separate video for the 6 elements I look for explosive opportunities. Feel free to go and watch that. But these are the 2 main things that I trade and that I look for when I do my screening. And number 6 is you're done, but repeat daily. This is really important. Repeating daily that process. It's simple. It doesn't take much time. Like I said, 10 to 30 minutes. It's clean, simple, consistent. 10 minutes, 5-10 minutes is going to be, a bit like at the moment when I'm doing this video, the markets are ranging, so the screeners are not very full. And this takes, 5 to 10 minutes, and that's all. And it might be that, when the market conditions are not appropriate, it might be that most of your screeners are empty and your routine is actually very short, only a few minutes, because there's almost nothing to look at during your trading routine. And that doesn't matter. The power of this is to do it and repeat every single day, to never miss opportunities. And it can take up as much as 30 minutes because, when the stars are aligned and the markets are running, the screeners are going to be full. So I'm going to have a lot of things to look at, but it's never going to take me like hours, right? It's always manageable. It always takes a little bit of time only out of my day. And I really love that, right? So if that's something that you'd like to learn, please, subscribe, YouTube, X, Telegram, and also head over my website and drop your mail if you want to get, if you want to be updated on the latest news and the latest thing that I'm going to release. Thanks for watching.